Okay, turning up the sound. Okay, I'd like to welcome everybody to Business Chat Live. Good morning, everybody. My name is Gary Stockton. I'm with Experian Business Information Services. We're going to have a discussion today with Derek Grunfelder-McCrank from Moody's Analytics about the Q2 Main Street report that Experian and Moody's Analytics partners on. Every quarter we give Moody's an extract of our data on small businesses, and Moody's economists kind of dig into that data and really help tell the story of what's going on with small business credit. So I'd like to introduce Derek McCrank. Good morning, Derek.
Good morning, Gary. Pleasure to be here.
Okay, so let's get into the discussion. We're going to talk about a couple of things here. We're going to kick off with business delinquency. In Q2, business delinquencies, they've been declining. They've been declining for about 2 years now. What's causing that? Are businesses better at managing debt, or are they just taking on less debt?
Well, I do think businesses are getting better at managing their debt. And part of the reason I say that is so we've seen that over time, the number of businesses that have entered our data set has been slightly declining. Not a lot, just ever so slightly. And what that is businesses that didn't manage their money as well are no longer utilizing credit, whether that be a personal decision on the part of the business where they say, we aren't going to touch the stuff anymore, or if they've been forced not to use it anymore through some sort of delinquency or charge-off process. But we have seen steady declines in line with steady declines in the number of businesses entering the data set. I do also want to mention, though, that economic growth is part of the story here as well. So as the economy grows, there's more money, more wealth. Businesses have greater access to that, and they're better able to pay their bills as not only they have better access to that increased economic activity, but their customers do as well. So the slow and steady economic growth, I think, is really at the heart of what we're seeing here with the trend in business delinquencies.
Okay, excellent. Okay, so let's talk a little bit about credit utilization, because it grew, but it grew at a slower rate year over year. What do you attribute that slow growth in utilization to?
So part of, I think, what makes the second quarter look slow in comparison to the first is that the increase that we saw in the first quarter was very large, and there was bound to be a little bit of a payback stemming from that in the second quarter. So I think businesses were gearing up for sort of their summer season, and then it sort of declines over the summer as they're utilizing the credit that they've drawn on. And hopefully, in heading into the third and fourth quarters, we'll see utilization continue to expand, hopefully a little faster, but the pace we're seeing now is still reasonable, especially when you look at the first half of the year as a whole.
Yeah. Well, and of course, we've had in the third quarter, actually we're in the third quarter. We've had this situation in Texas, which I know Moody's and Experian's going to be watching very closely. Do you think that's going to have much of obviously it's going to have an impact in that region, but what else could maybe happen as a result of something like that?
So I think there are going to be sort of two phases of what's going to happen as a result of this tragedy that we've seen in Texas and Louisiana in the last week. The first phase is going to be felt in the third quarter. Obviously, there's going to be pullback, not just in small businesses, though I think especially in the small business area. But there is going to be pullback that we see in that region, and it's going to hit the third quarter. So utilization in the third quarter will probably grow slowly again. Hopefully it will grow in the third quarter. But I think as we enter the second phase, which is sort of the recovery phase from this tragedy, that we'll see increased activity in the area, again, particularly for small businesses. And relating to the credit aspect of that, the SBA announced that they're preparing billions of dollars in new disaster loans, which they're going to be giving out in that area. So I think as far as credit goes, we'll see growth partially from that and aided by that. But businesses they'll need working capital in order to get their businesses up and running again, not only from damages, but lost revenue during this time. So I do think we'll see an expansion after an initial sort of contraction phase.
Yeah, I heard a fascinating stat the other day. I think this was on Marketplace, where they said that according to FEMA, following a natural disaster, 40% of the businesses that were closed due to the disaster never reopen, and up to a year later, up to 25% of businesses close. Do you think we're going to see, that type of thing happen in the Texas area? I'm sure there's a lot of businesses that are just flooded out that were maybe borderline on their financial stability. This could be kind of like the final nail in the coffin for some of those folks?
We will certainly see some of that. I don't have the data in front of me to accept or refute FEMA's figures, but I will say that from tragedy can come new life. And so we will see businesses dying out, but we'll also see businesses born as a result of what's happened. As people get the entrepreneurial spirit, especially in the Houston area, which is a very, very robust area in terms of economic activity, we'll see new businesses and new jobs being created, certainly in the construction industry, to rebuild what Hurricane Harvey destroyed. But we'll also see new opportunities in manufacturing, in the mining, particularly oil and gas areas. And in some regards, the hurricane wasn't as bad as it would be predicted. I don't want to give the impression that it wasn't a tragedy. It was.
Yeah. But
we expected much worse in terms of damage to oil and gas infrastructure than we saw. So we won't see as much damage in that sector, but we could still see new growth as a result of what happened.
Well, and in the Northeast, about a year after Sandy, I mean, we saw some really positive things happening in that region, particularly for construction, employment, things. They really did pick themselves up by their bootstraps and get back to business. So Texas, you just don't mess with Texas. They're going to be back stronger than ever. Well, let's talk about another state, because in the Main Street report, you did a summary of the top 5, bottom 5 in Georgia. It looks like they're a bit of a success story there. What's going on with Georgia?
Yeah, so really all the Southeast, we saw very impressive performance in the second quarter, especially when compared to a year ago. And part of that, in my opinion, is a population growth story. So we actually just last week put out a paper relating population growth to inflation in the areas. And we note that population growth causes inflation, as you would imagine. And in turn, that inflation can spur the creation of new businesses as people see an opportunity to undercut competitors in prices, as they see more money coming into the pockets of businesses and individuals who they think that they could compete with. They're more likely to establish businesses and spur more activity in an area. And I think that really is a huge part of what's happening in the Southeast.
Yeah, I agree. Okay, and also in Q2 we saw a decline in construction delinquency. So is housing driving that? If so, what regions are particularly strong at the moment for construction?
I do think it is housing that's driving a lot of that. So if you look at the latest housing data, we haven't seen housing in total expanding, maybe even at the level we would expect. But we've seen a shift from a multifamily housing construction into more single family housing construction. And as you think about it, more small businesses are involved in single family construction than in multifamily construction, which requires more employees, more labor, more capital. Um, so those smaller firms are, in many cases, better positioned to capture some of
Mm-hmm.
the
Okay.
we
Excellent.
do.
Sorry there, I was getting something else. There was a noise outside. I apologize for that. Live video. I mean, what can you do, right? Okay.
Uh, so those smaller firms are better positioned to capture that single family market share. And particularly for small business credit, we've seen that Nevada and Florida are two of the biggest states that have had housing turnarounds. So as those states have seen housing prices recover, they've seen more building activity and construction activity, and that's really helped those small firms to better capitalize themselves and manage their businesses and money better.
Yeah.
Yeah.
Okay. So we're still, we still got strength in the economy. Um, we've got obviously some things that concern folks concerning, the debt limit. There's some things kind of in the distance out there, but for now, it sounds like small businesses are just getting on with the business of doing business, right?
Yep, that's the best way to sum it up.
Okay.
Small businesses will keep doing what they're doing and expanding and growing, and they will carry on.
Okay. So September the 14th, I think we're going to get deeper into this discussion. We've got the quarterly business credit review. That's a week from Thursday. Yourself and Christian Doridis got to be
Mhm.
joined by Gavin Harding from Experian. We're going to be taking another deeper look at Q2 trends and just kind of seeing what's going on with small business. So I'm looking forward to speaking to you again, and I think I'm going to have to end the call. I've actually got a gardener outside my window right now with a leaf blower, if you could believe that. Timing.
All right. Well, thank you, Gary. I enjoyed talking with you, and I look forward to.
Okay. I apologize for the audio, folks. We're going to have to end that there. Please click the link in the description if you haven't registered already for the quarterly business credit review. And we'll see you a week from Thursday. And thank you, Derek, for taking time out to talk some highlights with us.
Thanks for talking, Gary. It's always